Donald Trump set to take office in January of 2025. There's been a lot of crypto enthusiasm, and Bitcoin recently crossed 100,000 the other week. So in this video, I wanted to walk through the 4 trading strategies that Bitcoin enthusiasts use as their bull case, and then look at some of the economic theory that either supports or debunks those trading strategies. And this blog was inspired by a Mark Meldrum video that I recently watched the other week, where he did an in-depth analysis and economic breakdown of cryptocurrency. For those of you that may not be familiar with Mark Meldrum, he's a longtime, really popular CFA instructor all over the internet, but he releases weekly market commentary, and he has some videos that he'll come out with ad hoc during the week. But it's a really great free resource to understand markets, economics, and trading theory at a very deep level. So very quickly, for those of you that don't know, I'm Santiago. I'm a private market investment analyst helping entrepreneur family offices invest in private markets. And I also manage my own portfolio of institutional style assets of my own. And so without further ado, let's hop right into it. Thesis number 1 for the bull case for crypto that I hear, and this is probably the most popular, is that there's nothing backing a fiat currency. So there's nothing backing your US dollar. And since we've left the gold standard, there's nothing backing this currency, and so you should invest in crypto. And I think that this is also inspired by situations where we've seen in countries like Argentina, for example, or Lebanon. I spent some time there, where you have citizens there that will have their local government's currency, and the next day you'll have 200% inflation, and you had money one day, literally the next day you can't even go buy a loaf of bread. Think about countries like Haiti, where their central bank and their money system has completely collapsed. So the idea is that if you invest in crypto, your money is safer here, and over time your money that you invest will appreciate. But I think to say that fiat currency is not backed by anything is a bit misleading and leaves out a good portion of economics. And I'm going to share my screen and walk through an example that Mark Meldrum gave. And so if you're going to say nothing's backing it, it completely ignores the fact that a government has a balance sheet. So excuse my drawing, but a government has liabilities and it has assets, just like any business, any individual. And we tend to only pay attention to the debt of a government. But a government also has assets. The government owns oil, so they own natural resources. They own land. Government owns intellectual property. So think about government military technology, the ability to build fighter jets, the intellectual property that backs that. The government also has labor and output. Yes, you are an asset of the government. And let me give you an example and explain how. So when you go to work, the productivity of the citizens, you contribute to your country's GDP, your gross domestic product, all goods and services sold in your country. And based on your productivity and labor and output, your government is going to be able to borrow against that. They're going to say, hey, you have a very strong GDP, you have a very strong economy and government. We feel comfortable lending you this amount of money. So your labor and output is an asset of the government. So to say that a fiat currency is not backed by anything because it's not on the gold standard completely takes away that governments do have assets. Now, in the examples where you have governments that they've completely lost control, well, that is a failure of the central bank. That's a whole nother situation. But the US government, our ability to borrow a lot of money is because we have a lot of assets. And one of those assets is our productivity and our GDP. Bull thesis that I hear, number 2, is fixing the money supply solves the government taking away your buying power. So the idea is that, hey, since there's only a finite amount of Bitcoin, if you fix the supply, that gets rid of inflation. And the government can't just print off money and take away your buying power. But I also want us to think about what fixing the money supply would mean. I'm going to go back to the drawing board. So a long time ago, governments and banks, you go to a town and you give them your gold and they give you some money back. And you, Farmer Joe, would go out in town and you take that money to your local merchant, your local store in town, and you contribute to the economy. And what governments figured out over time is that cities that had strong banking systems and that had an increasing money supply just had an overall better quality of life. They were just better places to live. And those that had stricter banking requirements and less lending were worse places to live. So if you fix the money supply, imagine a situation where there's only $100 in circulation. So I'm gonna just use easy example. And let's say Joe here he owned 60 of the 100. So he owns 60% of the money supply. He's very wealthy. And you have John here that owns another 20. And then there's another 20 that's just spread out. And you come along and you're young and motivated. You're 18 years old. You're ready to contribute to the economy and you want to start a business. Well, the only way for you to get money is to get it from one of these guys to take it, right? So it truly is a zero-sum game when it's a fixed supply because there's not an increase in supply. So either you're going to work for me, you're going to borrow from me, you're going to use my assets because you cannot create it. So what happens in a situation where the government says, okay, we want people to, go out and do things. Let's increase the money supply to 120. And instead of having to go to these individuals, you here can go to the bank. And let's say you borrow $10. You turn that $10 and you go buy a horse. I can't draw a horse. Let's just say that's a horse. Give it a little tail. And you go buy a horse and you start a farm and you create economic activity. This is what borrowing does. And so for those that say, hey, Bitcoin's going to fix the money supply, and this is why you should invest in it, I want you to think long and hard about what that actually means. Because in any complex system, there's trade-offs. When you pull one lever, it's going to affect the other side. So what does fixing the money supply actually means for citizens? What does it mean for the lower class? What does it mean for those that are trying to borrow? I'll say one of the things that makes America's economy so strong and one of the highest quality places of living to live is because we have access to a large amount of credit and capital. So America's probably the only place that I've ever been where you can go and you can get a loan for 30 years at a fixed rate to go buy a house. You can use leverage. And these loans create wealth. You go buy a house, it's worth more in 10 years. You sell it, you have a safe place to live, you're able to contribute to the economy, and you've generated wealth by using this type of leverage. In other places, this is not available. So it slows down the economic output in totality. And so to say that by using a cryptocurrency and there's a fixed supply and the government can't, create any more money, yeah, that is true. But what is the ramifications for that? What are you giving up? And we've learned over time that we'd rather deal with inflation and continue to print money to increase the quality of life, being Social Security, Medicaid benefits, things like that, increase borrowing, rather than fix the supply and deal with higher unemployment and more poverty. Because as you have an increasing population, more people are born. If you have a fixed money supply, then how do you create economic opportunity for the increase in population? It's something to think about. And so investment strategy number 3 that I hear from the crypto bulls is central banks print money. So it's better to invest in crypto. And this goes back to the previous example I gave in the beginning of if you have a central bank that is out of control or a government that continues to devalue your currency, you're saying, hey, it's better to invest in crypto because your money can be safe here and you don't have to deal with these wild fluctuations. Well, in the United States, the central bank does not print money. They only change the lending requirements in the reserves for banks so you can go get a loan. And so you going to go get a loan is what actually creates money, right? Or them sending you a check in the mail and a stimulus. Think about COVID, for example. So during COVID, when the economy was shut down and there was no economic activity, what the government and the Federal Reserve said was, hey, we're going to lower rates to a point that people can't refuse. So people say, man, if you're going to give me a 2% mortgage at 30 years, of course I'll buy a house. This increases economic activity. This is what they wanted to do. And then the Federal Reserve says, oh, this is getting a bit too much. I'm going to raise interest rates to a point so people don't want to start businesses. So people don't want to go buy a house. I'm going to slow this down. And so by just pointing to the central bank and saying, hey, they create all this money, so you should invest in crypto because this is a better option, completely leaves out the fact that these loans are what support our quality of life. These loans are what allow us to create enterprise and economic activity. When you go start a business and you can go get a business loan, or when you go get a car loan so that you can drive farther to get a better job. This is increasing economic activity. It's allowing us to live better lives. Right. And finally, trading strategy number 4, your money loses value. So invest in crypto. So the idea that if you have a US dollar, it's continuing to lose value. So you should invest in crypto. And your money's actually not losing value. Your labor is using value. And let me give you an example. So let's say it's 1950 and the minimum wage is $1.50. And at McDonald's, you can buy a cheeseburger for 50 cents. And so 1 hour of your labor equals 3 cheeseburgers, right? Let's fast forward to today. Minimum wage in my area, I think, is about $14.50. A cheeseburger is about $2 off the dollar menu. So now 1 hour of your labor can buy 7 cheeseburgers. Well, what do you mean? It's so hard to live. I can't afford. So what's up? Well, what happens is your money is actually not losing value. Your labor is losing value. So the money is just the median of exchange, right? It's just what we're using to transact our labor. It's our labor is what really matters. And so as economic conditions evolve, your labor becomes worth less and less for unskilled workers. Let me give you an example. Remember when you had a travel agent and you'd call on the phone to a travel agent, and now we have Expedia. So this labor, this unit of labor of 1 hour of labor for a travel agent is now deemed worthless. It's a low skilled job. On the other hand, you have a skill like a pilot, and as there's less and less pilots, their labor is valued more. They have unions. So over time, their labor is valued more and more based on supply and demand dynamics of the economy. And so the idea of that your money is losing value, so investing in crypto, no, it's the wrong unit of analysis. Your labor is actually losing value. So again, this isn't a conversation of if you should invest in crypto, if you shouldn't invest in crypto. It's looking at the economics behind it in a portfolio and deciding what's the best decision for you, right? So there's two sides. There's the optimistic speculation side. And I will say that there is something about speculation. I am not a speculator, but some of the most successful investors have been speculators. But if you're going to speculate, understand that you're speculating. And then there's the classic economic side. So I'm curious to hear which side you're on as financial advisors. For those of you that watch my previous blogs and videos, I'm looking to create a community of like-minded financial advisors and investors that are looking to discuss creative solutions for portfolios using different strategies, using private markets in your portfolios. So I'm curious to hear your thoughts on Bitcoin. Is this something that you're invested in? Leave your comments below. And until the next blog, thank you.